R. Sreesankar, Head Institutional Equities at Prabhudas Lilladher is now with us. Shri, thank you so much for taking out time for us. What do you think is happening in the markets? You think we are going down because of the earnings surprise, or it's a run-up to the big Fed event?
I think the earnings are behind us right now for the quarter, so I don't think that anymore it's going to be the earnings surprise, right? But my own personal view is that global growth is slowing down, so that's within that global growth, emerging markets are going to see a bigger pressure coming in. So here you have a problem for EMs, emerging markets all over, where the growth is going to be much lower. And as a consequence of it, you're probably not seeing a large amount of inflow going to come from FIIs. At least that's what the numbers indicate in terms of negative FII numbers for continuously, even when the market was moving up. So it's not a very pleasurable situation or a very good scenario right now as far as equity market is concerned. So you may have a couple of days of slowdown, and then you may have a bounce back, which you see. Then again, market goes into a limbo, no movements. And one day, when suddenly selling comes, if volumes are not there, then you will see a sharp correction. That's number one side. Second is, again, globally, if if issues with regard to terrorism and everything keeps coming in, that doesn't give you confidence level. That again, markets tend to be a bit wobbly. And that's another reason what we are seeing right now.
Right.
And third, if you look in terms of the main reason which you talked about in terms of interest rates or the Fed rates, and it's fairly well discounted in the market that you probably will see a Fed rate hike in December, because the economy is continuing to chug along strongly in the US. That's number one. And number two, the job additions have been stronger than what has been budgeted, anticipated. And three, as a consequence of 1 and 2, you see the unemployment rates dropping. So all these point out to probably a scenario wherein you don't have much to hold back in terms of interest rates rise. So I will be really surprised if I don't see a rate hike happen in December.
Right. FIs have been continuously selling. Could it also be because of commodity prices or other emerging market currencies where, some of the EM funds are taking in a lot of redemption pressures, and that's the reason why they have to sell? Could that also be one reason?
See, let's put it up this way. If you have seen a Russian currency probably down by around 80%, you're saying that the markets, you already invested in that market, you're down 80%. So the market tend to become so cheap at that point of time. So you probably you would have anticipated for a fall and moved away from some of those markets. That's number one. Number two is, yes, you are seeing in terms of currency losses, I just mentioned about Russia, Brazil. Just look at these performances over a 12-month period. Then you got Turkey, you got Malaysia, you got Indonesia, you got a lot of these currencies, which has actually been really clobbered. So when you look at those economies and these currencies, and you look at the way rupee has done, rupee has been relatively pretty strong. That's number one. And number two, if you look in terms of the growth, where you see Russia, Brazil, etc., going into a contraction mode, you still have a strong growth, 7.5%. That's a good growth. So I tend to believe that India, while will have this turmoil around, will emerge as one of the stronger markets and stronger economies going forward, because low commodity prices augurs well for us in terms of our import bill continues to remain on the lower side. Current account deficit remains under control. Fiscal deficit also comes under control, and all those things are pretty positive, while your tax revenues increases to a certain extent. Whereas the commodity exporters, be it Brazil, be it Russia, be it South Africa, be it even Indonesia, etc., or Malaysia, all of them getting into a problem. So you have certain advantage, and India has been in that advantageous position right now.
Right. So, all have agreed to the fact that there is that advantage for the balance sheet of the country, or, the oil imports that we do. But, what about some of the countries that are totally dependent on oil or some of the other commodities? Aren't there chances that there would be a default over there, a big redemption pressure coming in from there, or, some big global sort of metals and mining companies getting defaulted? Don't you think those are pressures that markets have ignored?
I don't think those pressures are something the markets have ignored. Markets have taken into cognizance this particular fact, and that's the reason why many of the emerging markets and many of these markets have been under pressure. So you just mentioned about terms of, yeah, whether it is default which is coming in. I'm thinking it in terms of a completely different manner. Look in terms of when oil prices are very high, there was a lot of countries within the Middle Eastern economies which have been investing globally. With oil prices being where they are right now, they probably will have issues with coming to their budgetary allocation because the revenues will not be sufficient. So at some point of time, you're bound to see their equity allocations from their surpluses which has gone, probably getting sold off and getting pushed back into the investment in their economies for it to grow, if should the oil prices remain at these levels. So the markets have taken cognizance of these facts, and that's the reason why markets are remaining subdued.
Right, but overall after the liftoff, you think that a lot of money can come into equities, because that's a much anticipated event. A lot of people are waiting for it, but somehow we've not seen that happen so far.
Pankaj, again, let me put it up. The way we expect a rate hike, that's going to happen in the US. I don't think that will happen in Europe. Europe will continue to print money. Europe will continue to have an easy monetary policy. Japan will probably continue to have an easy monetary policy, etc. It's a US which is going to see a rate hike. The issue here is we are expecting a growth. If I'm not mistaken, the growth rate that globally is expected to be somewhere around 2.5% for Canada 15, and then going forward to 16, etc. So if these kind of growth has to sustain, the kind of growth, the increase that will be seen from even emerging markets, that growth numbers may go down. So this is where the issue is. Are you going to see a slowing of growth further in these economies? So it's a big question. It doesn't have an answer right now. But you mentioned an earlier point about commodities, and a lot of these countries and companies which has got commodities exposures, and they are commodity companies with these lower commodity prices, the kind of losses that they are taking, or what will happen to them. I'm sure that there are going to be some issues with regard to some of the majors in terms of commodities, be it in terms of iron ore, be it in terms of coal, be it in terms of steel per se, everything. There are issues which is going to come up.
Right. The mid-cap index, Sri, has been maintaining its valuations. Last couple of days, of course, slightly different, where we have seen some selling pressure coming in. But it has maintained higher valuations. Despite Nifty going down, FI is continuously selling. You think it's only a function of the DII flows, or also the earnings from the mid-cap universe were decent?
I think when you look at the serious issue is from the commodity companies, where we have actually seen the earnings growth slowing down or going into losses, into a negative side big time. You look at even companies like, be it Vedanta, be it Tata Steel, be it a lot of those commodity companies. Every one of these commodity companies have seen their profits getting reduced. I wouldn't use the word wiped out, but significant erosion coming in their profits, or the profit estimates from 12 months back or 24 months back. So I think if you look into that category, in the mid-cap space, you can't see that many large companies in the commodity space. Most of them will be in the large cap space.
Right. Just a word on the commodity space, as you just said about these companies, that there would be a decline in the profits, and there would be some problem going ahead in terms of their earnings. It's still early to bottom fish into these metal companies, despite a significant correction that we've already seen.
I think so, because I don't know when it is going to end. The simple reason is, you have these metal companies, you have these steel companies, many of them have got a capex program, capex cycle going on. And you take even the largest public sector company in the steel sector, SAIL, their entire capacity expansion program is coming on stream. This capacity expansion has been going on for closer to 6 years now, from plan to execution to commercialization. By the time it gets commercialized, you will see what's happening. If I'm not mistaken, the EBITDA loss per ton during last quarter was in excess of 3,800 rupees. If my memory serves me right. So that's a huge number that we speak about for a company of sales size and the kind of number that effect it can have on the overall profitability. It's huge.
Right. Sri, thank you so much for taking out time for us. Always a pleasure talking to you. That was our Sreesankar from Prabhudas Lilladher saying that it may be a tough time for equities, but overall global events is something to track going ahead.